Boy, there has been some hot news about one of our favorite credit unions that we talk a lot about on this channel, which is Navy Federal. Today, we're going to be diving deep into a report by CNN, which has sparked a significant debate regarding mortgage approvals by Navy Fed. This report points into a shocking disparity in the approval rates for black and white applicants, suggesting a potential issue of racial discrimination in the lending process. We will explore not just what CNN report says, but also what they might be missing. So let's delve into the facts, figures, and real challenges behind securing a mortgage. Now, in the CNN report, it brought a critical issue into the spotlight, revealing that Navy Federal Credit Union had a notably higher mortgage denial rate for black applicants compared to their white counterparts. So in 2022 alone, more than half of black applicants were denied conventional home mortgages by Navy Federal. If you were to look at this chart that CNN provided, it showed that 77% of whites got approved for a mortgage, while on the lower end of the spectrum, blacks only got approved 48% of the time. So based on this infographic, it shows a gap of almost around 29%, which seems quite a bit. So what's more concerning is that this disparity persists amongst applicants with similar incomes and debt-to-income ratios. So in the article, it said that Navy Federal approved a slightly higher percentage of applications from white borrowers making less than $62,000 a year than they did black borrowers making $140,000 or more. So CNN, they also did a thorough statistical analysis that discovered black applicants to Navy Federal were more than twice as likely to get denied compared to white applicants, even when everything else was the same, which includes income, debt-to-income ratio, property value, down payment percentage, and even neighborhood characteristics. In the article, and also the video piece that CNN created, share Bob's story, which was also a black business owner in Texas who was denied a mortgage by Navy Federal in 2021, but then was approved from another lender about 2 weeks later. And he said that the rejection didn't make any sense at all. Now, we are going to touch base on this a little bit later, but what I want you guys to remember is that he was a business owner. Now, the gap in approval rates between black and white applicants in Navy Federal and other large lenders has always been present. But if you were to look at this chart right here, the largest gap is with Navy Federal when you compare it to Wells Fargo, Chase, Rocket Mortgage, and others. And surprisingly, actually the smallest gap was with Bank of America. So in response to this, Bill Pearson, who is the spokesperson for Navy Federal, defended the credit union's lending practices. According to Pearson, Navy Federal Credit Union is all about equal and fair lending, sticking to the rules and regulations. He said that they got employee training, statistical testing, third-party evaluations, and compliance reviews in place to ensure that a level playing field is for everyone. Pearson also pointed out that CNN's analysis missed some important factors that any financial institution considers when approving a mortgage loan, like credit score, available cash deposits, and the relationship history with the lender. That was the key point that had me questioning the validity of CNN's report. But more on this a little bit later when I share you my own perspective. So after hearing what the spokesperson for Navy Federal said, CNN said that that information is not available in the public mortgage data. So in response to that, Navy Federal declines to release additional data about this loan to CNN that includes borrower credit scores and other variables. So the thing about this is that Navy Federal cannot release that kind of information to anybody because there's a thing that we have in place called the Fair Credit Reporting Act. Now, if you were to apply for any type of loan, a credit card, or anything that requires getting your credit pulled, you would have to give consent to actually get it checked. So either physically through a signature or an electronic signature. So this is one of the major reasons why Navy Federal cannot release this data. So I understand that some view this as inconvenient, which I can understand why. But hopefully some people can actually understand that there is a thing in place for banking privacy. But on the bright side, CNN did give Navy Federal where credit is due, since a fourth of their conventional mortgage applicants are black and 18% of the conventional loans originated went to black borrowers, which is one of the larger portions than almost any other large lender. Even though there is such a big gap disparity, Navy Federal still lends to more black borrowers than the majority of other large financial institutions. So let me put this into a chart since CNN did not provide this. Let's give an example of 100 applicants. 25% of them are black. Now let's give an example of 100 conventional loans that were originated. 18% of those went to black borrowers. So let's rewind back to Bob's story. It was the summer of 2021 and he was on a hunt for a house. Now, here's the interesting part. Bob had been a loyal Navy Federal customer for years. He had a great relationship with them. He had paid off quite a few Navy Federal vehicle loans and even had a pre-approval with them. He had budgeted a down payment of 20% for his dream home. Everything was all set, but then just weeks before he was supposed to close the deal, he had some bad news. Navy Federal denied his application. They said that his income was not enough to cover his debts. So Bob said that that last minute denial did not make sense. According to the documents that he provided to CNN, he was making more than $100,000 a year from his logistics business, and at the time he had a credit score above 700. He also said he did not have any significant debts. Now, 2021 was a prime time to buy a house. Since interest rates were so low, he was afraid of losing the house, and he got connected with another mortgage lender that approved him for a loan in about 2 weeks, and the purchase went through. His realtor didn't understand how a lender could get a loan done within 15 days, while another one couldn't do it at all, which really didn't sit right with her. Now, the spokesperson from Navy Federal declined to comment on Bob's denial since he says that members' personal and account information are private and confidential. According to CNN's analysis, Navy Federal shows significant racial disparities in mortgage approval rates. They took into account various factors like income, debt-to-income ratio, loan amount, property value, and neighborhood demographics. Surprisingly, even among applicants who are identical in all of these aspects, Black applicants were twice as likely to get denied compared to white applicants. Latino applicants, on the other hand, were roughly 85% more likely to be denied. What's worth noting is that credit scores and credit profiles were not considered in the analysis due to privacy concerns. However, it is possible that the differences in credit scores could contribute to the racial disparity. So CNN, they point out historical discrimination and limited access to traditional financial institutions in Black neighborhoods may contribute to lower credit scores among Black borrowers. Now, that was the whole gist of the whole summary from this article. It's very lengthy, so you can find the whole article and the video down in the description below so you can make your own thoughts out of it. So as we dissect the CNN report, it is crucial to consider the factors that typically influence mortgage approvals. The report omits key factors like credit scores and credit history, because these are vital components in assessing a borrower's risk and is a standard criteria for any financial institution. So Bill Pearson, the representative for Navy Federal, criticized CNN's analysis for this very reason, stating that it didn't reflect their comprehensive lending practices. So this raised the questions about the depth of CNN's analysis and whether if it fully captures the complexities of the mortgage approval process. So a lot of times, underwriting is not as manual as it once was. A lot of things get pushed into a computer algorithm, and based on the applicant's risk factors will determine whether or not they get approved. So there are quite a few things that actually go into a mortgage application. I can tell you firsthand since I've gone through this application multiple times, plus having talked to many lenders. Now, depending on where you live, if you have a partner or spouse, their credit may also get pulled and their debt application will also be a factor into your ability of getting approved. You would also have to provide supporting documents such as bank statements and pay stubs. And if you're self-employed, you also have to produce 2 years of tax returns to demonstrate proof of income. So in the article, Bob owned a business and he was self-employed. They stated that he made at least $100,000 a year. My main issue with this is that self-employed individuals have a much harder time getting approved for mortgages compared to a traditional employee. I remember when I just landed a job at a hospital and I have not begun getting paid yet, and I was actually thinking about buying a home. So I was actually able to get pre-approved for a mortgage prior to even getting paid. Now, of course, my credit profile was a little bit different back then. I didn't have any debt, no student loans, and I had a solid credit score. Fast forward a few years later, I owned my business for at least a year and had 1 year of tax returns. And I was making more money than I did years ago before even starting that job. And lenders would still not approve me for a mortgage. And Navy Federal was actually one of those lenders. The thing about self-employed individuals is that you're automatically a red flag to any lender's eyes. How many stories do you hear about businesses not lasting a couple years, let alone 5 to 10 years? The sad truth is that lenders will see employees as more stable individuals compared to self-employed individuals any day of the week. Now, another thing that lenders will ask will be your assets. This is your proof of bank statements, retirement accounts, saving accounts, and they usually review these accounts within the past 60 days. They will also take a look at your credit report, which includes your liabilities, how much debt that you have, your car loans, credit card debt, and personal loans. So in addition to that, the house itself will also be a factor in your ability to get approved. So the address of the property, how much money is needed to finance a property, and things of the sort. So let's break down Bob's profile as much as the article shares. It says that Bob was self-employed. He was making more than $100,000 a year from his logistics business, and he had a credit score above 700. He also did not have any significant debts, and he was also pre-approved from Navy Federal. Now let's break down his income. They said that he was making more than $100,000 a year from his business. Now, is this after-tax income? Was this before tax write-offs or after write-offs? Because that plays a significant role on how much you can qualify for. I can say that I make $1 million a year, but my expenses are $900,000. Now, this is not unrealistic for a lot of companies. Just because you're making $1 million a year does not technically make you a millionaire because you don't get to keep everything. That's the one thing that CNN did not disclose about his income. Now, if this was his net income that he was making per year, was he making this consistently for the past 2 years? Because with lenders, they would take your net income within the past 2 years and divide it by 24. So if he made $50,000 a year before and now he's making $100,000, if you were to take $150,000 divided by 24, during the mortgage application, it would show that he has an average income of $75,000 per year. Now let's move on to talk about his credit score. His credit score was above 700, which is really good because with most conventional loans, they tend to look for credit scores above 620, and it can go down to 580 if you're looking for different type of loans like FHA and things of the sort. But typically conventional loans are looking for at least 620 and above. They really didn't say what kind of credit score this was, whether it was a FICO score, a mortgage FICO score, or even a Vantage score, because there are differences in numbers when you pull certain types of credit. Now, if this was his mortgage FICO scores, which most lenders will take a look at, then from a credit perspective, that is pretty good. Next, he stated that he did not have any significant debts. This is a pretty vague statement because you really don't know what is considered significant. So does this mean that he does not have a high credit utilization on his credit cards? Or does having an auto loan a significant debt? How about student loans? So it really doesn't paint a picture of his financial situation. And let's move on to the part where it says that he got pre-approved. Now, a pre-approval is a pretty good sign when you apply for a mortgage. It means that based on the information that you provided to them, everything checks out and there's a high probability that you would get approved when it comes to closing. Now, pre-approval does not guarantee that you will get the loan, because by the time you get pre-approved, there are a lot of things that can happen in between when you can find your home and close. His utilization might have been out of whack, he might have moved money in and out of his accounts, or something changed on his credit profile. If you remember the house buying craze back in 2021, where mortgage rates were at an all-time low, people were buying and selling the homes way over asking. It could have been a possibility that they would not lend to him due to the fact that they did not believe that the house was worth that much. Or it was possible that he overbid on the property that he really wanted. He did state that this was his dream house. Buying a house can be very emotional based, so if you're in the middle of a bidding war, you might be willing to overpay. Now, here's my personal experiences with Navy Federal mortgages. So when I was looking to buy a home, I was self-employed and I was shopping for VA loans. Now, I gotta be honest, their rates and fees didn't quite measure up to other local and national banks when it came to mortgages. Now, don't get me wrong, Navy Federal is solid for credit cards, banking, and auto loans, but mortgages just wasn't my cup of tea. I actually ended up getting way better options from different programs since I live in the state of California, and I also had a way better experience with a mortgage broker that can help find the best program for my specific situation compared to going to a bank or credit union. Now, I get it, racism does exist, so that's why when you are looking to do a big purchase, whether it is an auto loan or even a mortgage, it's always best to do some rate shopping. Now, even if you get your credit report shotgunned by multiple lenders, only one of them would count against your hard inquiries. So having multiple hard inquiries is not a bad thing because the credit bureaus would know that you are rate shopping. Now, I get it. Racism does exist. Racial discrimination exists. And I'm pretty sure that we've seen it and there are statistical proof of it. I'm a minority in the US and I have experienced this myself, so I'm not really shocked if this exists in the banking industry. Now, it is hard to say that it is impossible for Navy Federal or any other financial institution to be racially discriminating against minorities. But if they are discriminating against Black people or any other minority, this article really did not find any evidence about it. Because the key thing with this article is that the article really ignores credit scores and profiles when they are comparing Black to white borrowers. Plus, there are so many other factors that go into underwriting. Now, that's not to say that if you're Black and you're applying for a mortgage to Navy Federal, that you have less than a 50% chance of getting approved. This is totally untrue. Now, if you were to apply and you don't get approved, it's usually not due to the color of your skin. It comes down to your credit profile, debt to income, your employment history, and other personal assets that you have. If you're denied for a loan, then work on those things that underwriters are looking for. If you have a bad credit profile, meaning that you have late payments, collections, charge-offs, or any other things that are negative on your credit, then you need to fix that. It is still possible to have negatives on your credit score and still have a credit score in the low 700s. Also, if you get denied from Navy Federal, it's not the end all that you can't get lending. Move on to another lender. Try to find a local mortgage broker in the area to help you out, like Bob did in his story. My experience by working with local mortgage brokers and local financial institutions tends to work out much better compared to big name banks and credit unions. And I'm pretty sure that most people that you talk to, they will have the same experience as well. If you have had similar experience or insights, please share with them in the comments below. I would love to hear them. And if you want to hang out with me some more and learn more stuff about credit, check out these videos over here.